Hello, good morning, ladies and gentlemen. How are we doing today? And I hope you're ready for the New York session today. Okay, let's confirm that we are good to go this morning. So I would appreciate that you give me some feedback if you can see my screen and you can hear my voice clearly. Just type in hi in the comment sections. This gives me the feedback I need to confirm that we are good to go this morning. So let's see some feedback, please. If you can see my screen, type in hi in the comment section and let's kickstart the live session, please. Okay, what do we have right here in the comment section? Okay, I can see Lucas. Is that Lucas? Okay, Lucas 6789. Good morning to you. Thank you very much. Raven Crow, how are you doing this morning? Thank you. To Haiti, good morning. 9364 Mick, good morning to you. Thank you very much. Lucica Panzaru, I hope I pronounced your name correctly. Pardon me if I didn't. Good morning to you. Thank you very much. All right, I will take this as a positive feedback that we are good to go this morning. I'm so excited to welcome you all to yet another promising session on the Extreme Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I will be your host, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Okay, look at Lucica. I saw your comment. All right. Thank you. And for those who are joining us for the first time, you are highly welcome on board. I'm so glad that to have you around. And what we simply do here on a daily basis is to come together as a community in anticipation of the New York session to review all the financial instruments that we have been monitoring since the beginning of the week, and at the same time manage our existing trade, review our existing trade, and take a position ahead of the New York session. It might look a little bit overwhelming at first since this is going to be your first time with us, but I assure you that with time you get to understand how this works and you will be able to use the information you have gathered here to make your own individual decision. So my advice is that you stay tuned in, join us on a daily basis. It's 10 a.m. UTC every day, 11 a.m. West African time, and with time you get to understand how this works. So once again, you're highly welcome on board. So with that being said, here we shall be diving right into the business, and you all know what we do. Firstly, whenever we anticipate New York sessions like this, we want to see the economic calendar so that we can keep tabs with the fundamental aspect of the market. So I was able to pull out some couple of macroeconomic events that we shall be looking forward to today, and obviously we are going to be focusing on events that will be affecting the pairs that we have been monitoring since the beginning of the week. And these currencies are the pound sterling, the US dollar, and the Japanese yen. And for today, Wednesday, April 5, we only have 2 macroeconomic events coming up today. And the first one is coming up in 2 hours from now, and that is the ADP employment change. So the employment change is released by the Automatic Data Processing Incorporation, and this is a measure of the change in the number of employed personnel in the US economy. So this is an high impact event which normally gives us a positive implication for consumer spending and stimulating economic growth. So a reading here, we have a reading here which we have a 242,000, which is the previous data that came in here, and we have a consensus projection of 200,000. So that's a little bit deep to the downside, so we might be expecting a dovish expectation on the US dollar amongst its peers for today. But we still need to hold on and see what the actual figure is going to be coming in at. So this is coming up in 2 hours, and we shall be on standby to see how the market will be reacting to that. And then we also have the ISM Services PMI, which is coming up in 4 to 5 hours from now. And this event gives us an index into the business condition in the US non-manufacturing sector. So this event, normally whatever data we have here, if anything from 50 above is something positive for the US economy, and anything below the 50 is negative for the US economy. And if we look at the data that came in the previous month, that is February, it came in at about 55.1, which is on the positive side actually. But the consensus we have for today, there is an expectation that it would likely drop to 54.5. So we are also going to be looking forward to this event too as well. So on this event, we want to see if the data coming in will be just as expected, below expectation, or probably beyond expectation. And this definitely will be bringing some volatility into the market. So what we are going to be doing today is to review how well the pairs that we have been monitoring since the beginning of the week has been doing so far. And then we are going to take into consideration the macroeconomic event we are looking forward to today, and how well and how to position ourselves in such a way that we can catch these moves when they finally happen. So with that information we have gathered here on the macroeconomic calendar, so let's dive into the charts to see what is really going on in the market. So here we are, and as usual, the first commodity we are going to be looking at this morning is the US oil. And on the US oil, what is going on this chart in the last 48 to 64 hours now, as we are not yet up to 72 hours yet. So at the beginning of the week, this is what we saw on this chart. We saw that the week started out with a 48 pips bullish gap, which was evident here as we identified it with this rectangle, yellow rectangle you can see on your left hand side of the screen. Then the price action started the week at the $80.50 level, which happened to be our initial resistance line for this week. Then we saw price drop a little further into that $79 level, which happened to be our support line for this week. And you know what we look out for whenever we have a simple channel like this, where price action is trapped within a range? What we needed to do was to hold on and wait for price action to either break out of the resistance line to the upside for buying opportunity, or break down the support line to the downside for selling opportunity. And in this case scenario that we have here, with our stop order placed at both ends so that we can catch any of this moves, we saw how the buy stop order was triggered as soon as price action broke out of the $80.50 level. And during our live session yesterday, we actually acknowledged this, and we said we continue to look out for more buying opportunity if price action remain above the $80.50 level. And in order to be able to catch more trading opportunities here during the New York session yesterday, what we did here was to also acknowledge another resistance line here at the $81.25 level, which happened to be an area we noticed some selling pressure prior to the live session yesterday. And one thing I told us here yesterday is that we want to see price action break out, do some retest of structure where the appearance of buy pressure above the structure in our lower time frame will be giving us an opportunity to buy. But if we look at what happened here during the New York session yesterday, we saw this engulfing bearish candle which struck through the $80.50 level to the downside with an engulfing bearish candle, though price action climbed up a little bit to the upside. And since then, we have seen a situation where price is back within this channel. So as we head into the new to the New York session today, what is going to be our plan? As currently we are supposed not to be in any trade right now, as we must have been taken out of our buy position yesterday at a worst case scenario of break even. Remember, for those who are already bought above the $80.50 level on Monday, I told us all that we should secure our current position by moving our stop loss to break even. And even if you had not moved your stop loss to break even, you will still have the current trade running at this particular point in time. But with the look of things right now, and considering what has been happening in this market in the last 3 days now, we could see that sellers are probably getting a little bit of a positive traction around this area. As you can see, following the breakout of the $80.50 level, which happened to be our initial resistance line for the week, we can see that though the breakout happened, but the bullish traction wasn't that significant for the buyers to feel comfortable adding more position. And with the situation we have here, we begin to see selling pressure gradually coming in this market. Now let's look at what happened here during the New York session yesterday. We saw a sharp rejection of the $81.25 level, and during the early hours of today, we can see here that price action has been finding it very difficult to find a new high. As you can see here, we now have a lower high here, which from a technical standpoint is a sign that sellers are gradually gaining momentum. Now, just like what we said here yesterday, if we zoom out of this current structure and look at how price action has been playing out here since last week, remember we had a demand zone sitting around the $72.50 level, which you can see here. So we have an impulsive move that led price into the highest point it has been in the last couple of months, which is at the $81.78. And if we take this into consideration, you will agree with me that a retracement phase here is long overdue, as those who took advantage of the buy position here will at one point want to be making some money off what the positions they have had, and this is likely going to reflect on the chart as a couple of retracement phases, consolidation phases, before price will drop into a structure which likely could be our golden zone area, an area between the 50 and the 78.6% of the previous impulse leg before another wave of bullish momentum will happen. So these are one of the considerations we are going to be looking at while we go into the details of what is really happening in this market. Now, looking at what has been happening here since the beginning of this week, you will see that the lowest point price action has ever been is the $79 level. And since that time, price action had continued to find higher highs, despite the fact that we have lower highs at the same time. So we had a higher high, a higher low here. We had a higher low here. So we need to be very careful of this current consolidation phase. So we want to map it out and looking at it from a technical standpoint to decipher how to position ourselves ahead of the New York session today. So what I will be doing right now is to bring out my line chart, which doesn't seem to capture the look of the lower highs here, as they still are not yet mature. So let me do something here first of all. Then we shall be bringing back our candle chart to do some readjustment. So if we do some readjustment here to capture what has been happening so far, so we should be having something like this. So right now, if you look at the current structure, you will see that price action appear to be transitioning into something that looks like a pennant pattern here, where we have something like a rectangle after connecting the series of lower highs. And after connecting the series of higher lows here, we have something like this. So we have a traction already, a consolidation phase, which from my point of view might likely be as a result of the anticipation of the macroeconomic event today, where majority in this market are looking forward to see how the market will react to this event before bringing in liquidity into the market. So with this kind of situation here, you know what we are going to be looking out for definitely whenever we have this channel. So the new rectangle structure we have here also shares the same expectation with that flat channel we identified here between the $81.25 level and the $80.50 area. So what we are going to be looking out for today is either a breakout of the resistance line here for signals for buying opportunity, where a retest of structure will definitely be giving us more opportunity to add more position to our existing trade. And if the contrary happens, then a breakdown of the support line of that trend line and the $80.50 level will be welcoming sell position in this market. And one thing I would like to state here is that we are not going to be jumping into any trade right away with stop orders at this particular point in time, considering the consolidation phase here, which emphasizes the indecision in this market. So once we sight a breakout of either of this structure, what we want to be doing next is to scale down to our lower time frame. It could be your 3 minutes, 5 minutes, 10 minutes time frame, to look out for retest of structure, giving us a clue that price action is actually going towards that direction. Then we could have a confirmation to join that direction. So what I'm simply saying here is, if in this case here price action drops below the $80.50 level, we want to be scaling down to our lower time frame to look out for price action retesting structure, selling pressure right there to give us a confirmation that we are good to sell the US oil. And if we are selling, I want us to consider this as a counter trend opportunity, which is likely going to be a retracement of the previous impulse leg that we identified during the course of last week's trading session. So it might likely come into the $78 level or the $76 area, where we are going to be looking out for buying pressure for another wave of bullish momentum. But if price action breaks out of the $81.25 level and the trend line, bearish trend line here, then this will be a beautiful signal for us to join a bullish momentum to the upside. So we are at an equilibrium right now, so it requires quite a lot of patience for us to be part of this move in either way it is going. So please be patient here. Screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on the US oil. So if you have any questions whatsoever, feel free to drop it in the comment section, and I will be willing to be of help in that regard. So in the absence of no questions, I want to assume that we're on the same page here, and all I've said is clearly understood. So I will be moving on to the next option, and the next option we are going to be looking at this morning is the US tech. And on the US tech here, we have been witnessing a choppy situation here since the beginning of the week. And excuse me, at the beginning of the week, we saw our price action started at around the 13,150 level here, after a huge bearish gap here that we saw here, and then price action dropped to the downside into the $13,070 level, which happens to be our support line for this week. And if you look at what has been happening in this market in the last 3 days, you will see how price action has consistently found buy pressure around the $13,070 level to confirm a beautiful support line around that area. And with the resistance line sitting at a 13,150, you know that whatever situation, whenever we have this kind of situation, we want to see price action either break out of the resistance line for trading opportunity, or the breakdown of the support line for selling opportunity. And prior to the our live session yesterday, we already cited the breakout of the structure, and I told us all that those who missed out on this opportunity might likely want to be part of this move only if we see price action either retest into the 13,190 or the 13,150 level, where I actually said that we want to be seen by pressure resume above either of the structure to give us a confirmation that we can be going bullish on this one. But one thing we noticed when we scaled down to a lower time frame is that we really didn't see that buy pressure actually spring out of the 13,150 as we saw price action break down the 13,150 with a sign that sellers might likely come in at that point in the market. And with that situation here, we have seen our price drop significantly to the downside, coming back into the support line at a 13,170, and in the last 24 hours we have been witnessing buy pressure from that area. And with the situation we have here, how do we intend to plan ourselves ahead of the New York session today? Well, it's a simple setup we have here, but the first thing I would like to acknowledge at this point is first of all the bearish trend line. And when I connected the series of lower highs here, we have this beautiful bearish trend line which emphasized some level of seller strength in this market. Though we had a breakout happen here yesterday, but as you can see, price immediately dropped back below the bearish trend line, and then we saw price move to the downside. But the buy pressure here appeared to have been stopping sellers from getting further to the downside. Now, there is one thing about this structure that makes me think that we might be in for a sell momentum for today. And but further buttressing that is the bearish trend line. Now, if you zoom out of the current structure and take a look at the impulsive move that got us to this point last week, you will see that a retracement phase seems overdue with this current structure. And to further buttress this, you will see how the structure around here appears to be transitioning into a reversal pattern, which closely looks like a head and shoulder pattern at this point. Let me give you a visual representation of what I'm talking about. So we have the right shoulder somewhere around here, the left shoulder, we have the head somewhere around here, and then we have the right shoulder somewhere around here, where the $13,070 level, which happened to be the support line for this week, might likely turn out to be the neckline of that reversal pattern. But at this point in time, this reversal pattern is not yet valid, as we still need a breakdown of the neckline of that reversal pattern to give us a confirmation that truly this is going to be a reversal move, where a retest of that structure will definitely be welcoming selling opportunity in this market. And this is what we might be tending towards for today on the US tech. So we shall be waiting for price action to break down the $13,070 level. We are selling pressure identified around that area on our lower time frame. We'll be welcoming selling opportunities in this market. And before I close the US tech, I think it is appropriate that we take a look at the daily time frame, or a much more higher time frame, to see what is really going on around here, so that we can sync whatever we have on the daily time frame with what we have on the 1 hour time frame to have a well-informed decision ahead of the New York session today. So permit me to scale up a little into the daily time frame. Let's have an holistic point of view of what is really happening here. Then we shall come back and make a final decision for today on the 1 hour time frame. Now, looking at the daily time frame here, remember we acknowledge the fact that price action has been bullish since the beginning of the year, and to further buttress this is this ascending channel that you can see on my screen right now, after we connected a series of higher highs and a series of higher lows in this market. Now, the breakout of the 12,800 level last week's trading session was a beautiful signal that we might be going bullish in this market after breaking out of a very significant strong selling niche in this market, which has lasted over 7 months in this market. Now, with the breakout of the structure here, we all know that from a technical standpoint, whenever price action breaks out a key structure like this, we expect that one point in time price is likely going to come back, do a retest of the structure that was broken, where the appearance of buy pressure will incite another wave of bullish momentum into that our TP target zone that we have here. And one thing we said during the live session yesterday is that we are going to be looking at how price monitoring how participants in this market will be reacting to that area here at the $13,200 level to decide if we are actually going to be buying at that point or selling at that area. As there are two possibilities that could happen here. We could either see a trend continuation pattern around this area to inside a trend continuation to the upside, or we could see a reversal pattern around that area to incite a retracement back into the structure that was broken before another second wave of a bullish momentum will happen in this market. And with the look of things here, and coupled with the potential reversal pattern we identified around this area on our 1 hour time frame, we might likely see price action drop to the downside, probably into the 12,800 level, where depending on how price action reacts to that 12,800 will now determine if we are going to be adding more sell position if price action breaks down that structure to the downside, or get ready to buy if price action start finding buy pressure above the 12,800. So in the meantime, we don't want to be too ambitious here. So if the sell pressure continues, where the reversal pattern we identified on the 1 hour time frame becomes valid, when the breakdown of the neckline happens, we want to be having our TP target at around the 12,800 level, which will be dovetailing to about 250 to about 270 pips in profit if that is going to be the case. So right now, let's scale back down into the 1 hour time frame, and our center of focus will be the trading activity around this area since the beginning of the week. So going back down into the 1 hour time frame, so with the information we have gathered there on the daily time frame, we scale back down into the 1 hour time frame, and at this point I am of the opinion that we might be seeing a breakdown of the $13,070 level today. And I'm of the opinion also that majority of the participants in this market are actually looking forward to the macroeconomic events coming up today, and that is why we are witnessing this choppy situation that has been happening here since the beginning of the week. So personally, I will suggest that we have a sell stop order right below the 13,070 with the hopes of catching that move all the way, though there could be some retracement phases around that area, so you want to be very patient. But if you think you want a retracement phase to happen before you join, then it's okay. But if you don't mind, you can have your sell stop order and wait for the retracement phase to happen, and then if it happens, then we want to be adding more position to our existing trade. So stop loss should be somewhere right above that bearish trend line, which could be dovetailing to about 70 to 75 pips stop loss. So let's see how that plays out, and hope that price action will continue to the downside. And remember, on the daily time frame, we already identified a TP target zone around the 12,800. So let's see how price action plays out in that regard. Now, in as much as we're looking out for selling opportunities in this market, you know, it's our culture that we also keep tabs of the potentials of the opposite perspective, and which is the bullish momentum here. And if we take into consideration what has been happening here for quite a while now, I think on the 4 hours time frame, this was buttressed clearly on the 4 hours time frame. So let's quickly run through the 4 hours time frame, which I would like us to see here. So on the 4 hours time frame, we have an ascending channel already figured out here, where price action has consistently formed higher highs and higher lows. And if you look at the structure here, you can see that we might likely be seeing price come back into the support line of that ascending channel that we see here. So let's see what happens from this current structure, and this bearish trend line here will continue to be our guide for trading activity for the later part of this week. So back into the 1 hour time frame, let's look at this. So this is what we are looking at So we are going to be looking forward to see how price will react to the support line of that ascending channel to decide what our next line of action will be. So a breakdown of that support line will welcome selling opportunities here. So for the other perspective here that I was saying, well, I want to see a breakout of the trend line happen. We are not jumping right away. We want to see retest of structure. We want to see buy pressure above this level. That is, sellers find it difficult to break back below the trend line. Then the breakout retest of structure will welcome buy position in this market. So in that regard, we shall be using the resistant line for the week as a yardstick for buying opportunity in this market, where a breakout of that 13,150 will be welcoming a buy position in this market. So let's be on standby for either of these opportunities to happen so that we can join any of this potential move to either the upside or to the downside here. So we are at the equilibrium, so we require a lot of patience here to be part of this move to the upside or downside in that regard. So that is that on the US tech for today. And I can see Lucas 6789 is asking about the gold. Yes, we are going to be treating the gold. The gold is one of the pairs we are monitoring for this week, and we shall be reviewing it to see how to position ourselves ahead of the New York session today. So I implore that you stay tuned in. Cast, I see your comment. Good morning to you, Cast. Glad to have you around. How are you doing today, Cast? All right. So with that being said here on the US tech, and in the absence of no questions, let's move on to the next pair. And I think the next pair that we are going to be treating is the gold. So I hope Lucas is around. So we are treating the gold right away. And on the gold, we are very, very profitable on the gold so far this week. And one thing we saw here during our live session yesterday, remember, if you recall vividly, we positioned ourselves for either a bearish or bullish momentum. So this is what we saw at the beginning of the week. Okay, so we saw this. Hold on a second. Okay, since the New York session on Tuesday, on Monday, I guess. All right, on Monday we saw the selling pressure resume around the $1,990 level. And then we also had a support line at the $1,978 level. And during our live session yesterday, we laid more emphasis on this consolidation phase that was observed here between the 1,982 and the 1,978, where we said either a breakdown of the structure or a breakout of the structure will give us an opportunity to either buy or sell. And with a sell stop order below the structure and a buy stop order above this level, we had our buy position triggered at the breakout of the 1,982. And since then, price action moved significantly well in our favor. And if you recall yesterday, I also told us that we are going to be having a buy stop order above the 1,990 to welcome additional position, as that would have taken out all the sell positions around the 1,990 for another opportunity to join. And for those who took advantage of these opportunities yesterday, kudos to you for being on standby to catch this move, as price action moved significantly with a whopping 400 plus pips in profit in our favor. So whatever area you have taken your profit, well done to you for being on standby, and I hope by this time you are already out of that buy position. So at this point in time, what is going to be our next line of action? What do we plan to do in the New York session today? Well, I was able to find a simple setup here after we observed price action testing the $2,025 level, which happened to be the first time this will be happening this year. So this is what I was able to identify here. So what I did here during the later part of the New York session yesterday, which I actually shared on my public platform, was this beautiful channel that is situated between the $2,025 level and the $2,015 area. So we have the resistance line of this channel here, and we have the support line of the channel around here. And if you have been a regular observer with us here in the Extra and Speed community, you would know what we look out for whenever we have this kind of simple setup. What we want to be seeing here is either price action break down the structure and giving us a sell opportunity, and that will likely be a retracement of the previous impulse leg, or we look out for buying opportunity at the breakout of the $2,025 level. And with a buy stop order above the $2,025 level, I already have a buy position triggered, which currently is running in a loss of about how many pips that is. That's about 19 pips thereabout, or 17 pips approximately on that one. So I am currently in a loss here, and if you're actually taking advantage of that move as well, it's okay. Well, we have been quite profitable so far, so we could still relinquish a percent of whatever our portfolio size is on this one. So right now, what is our plans, what is our expectations, and what is going to be our yardstick that will be guiding our trading activity for today based on this current market structure? But before I go into the details on that one, it's important here I shed more light on the psychological expectations around this area. Now, there is one thing about price action finding new highs, which most of the time price action needs some time to acclimatize with that structure. And most especially when price action finds a new high, we normally see structures like consolidation, retracement phases, choppy situation around that area, as people are still not very comfortable with that level. And it appears we're beginning to see something like that happen around this area. As you can see, as soon as price tested the $2,025 level, we have been witnessing a choppy situation around this area, which is a clue that participants are still trying to test water to know if they should hold on to the position or start doing some profit taking activity, which will reflect on the chart as a retracement phase to the downside. So with this understanding in mind, we also want to be able to be on standby to catch any potential trading opportunity at this point by positioning ourselves strategically well. And coupled with the fact that we're expecting a macroeconomic event today in a couple of hours from now, we might likely see a huge traction to either side. It could go bullish to the upside, and it could go bearish to the downside, where price will do a retracement phase into structure before another wave of bullish momentum will happen. So to make things easy for us during the New York session today, what I did here was to connect the series of higher lows. So despite the fact that we have a choppy situation, we can still see some level of buying pressure trying to build up some momentum to break out of the $2,025 level. And if we connect the series of higher lows in this market, you will see that we have a bullish trend line, which at this point I will be calling a temporary bullish trend line, since we're yet to see a significant breakout of that level. So this trend line here is going to be serving as our yardstick for trading activity for today. And what this simply means is that if price action continues to trade above that bullish trend line, we will feel comfortable in our buy position, and at the same time look for more opportunities to add more position to our existing trade. However, if price action breaks down the trend line to the downside, then we might be seeing this as a breach of the trend line, where it gives us a sign that the trend line may no longer have the capacity to hold that bullish momentum. And one thing we are going to be looking out for here, whenever the breakdown of the trend line happen, is to remain patient and look out for retest of structure, where price action retests the bullish trend that was broken. It could retest the trend line, it could retest the $2,025 level, but most importantly, what we want to be seeing on our lower time frame is a selling pressure pattern, where price action could evolve into a reversal pattern. Then we look out for breakdown retest on our lower time frame to join that sell momentum to the downside. And when a further breakdown of the $2,015 level happens, then at this point we have a significant signal that informs us that we are going to be going through a retracement phase to the downside, where there's an opportunity to add more position will be highly welcomed in this market. So this is what we want to see here before we can be selling the XAUUSD for today. Aside this, if price action continues to trade above both the bullish trend line and the $2,025 level, we shall remain bullish in this particular market. So these are my views here on the XAUUSD. You might want to screenshot my screen so that you can use it as a reference point whenever you're about to make your own individual decision on this commodity. So that is that on the XAUUSD. It's quite a simple setup that we have here, and let's be on standby to catch any of these opportunities. Now, before I close on the XAUUSD, I would like us to quickly have a review of the daily time frame so that we can refresh our memories of what it actually looks like before this whole bullish momentum happened on this chart. So going into the daily time frame here, so let's see what we saw at the beginning of the week that made us to make the decision that we have made so far. So the first thing we observed on the daily time frame was the fact that price action has been bullish. And to further emphasize the strength of the buyers in this market, we have this ascending channel figured out. Now, prior to the beginning of the live session yesterday, we had the simple channel where price action was transitioning into what I will call a pennant channel around this area, which we actually laid emphasis on the 4 hours time frame, which I will be showing you in a moment. So we saw how price action was rejecting the $2,000 level, and I told us all that this was the first time price action would ever get into that $2,000 area, as there's a high tendency for a consolidation, a retracement to happen around this area so that price will get acclimatized with that level before they can gain that momentum to break out of that $2,000 level, which is what we saw here. And finally, we saw the breakout of the $2,000 level yesterday. Price action has found a new high, and like I always say here, whenever we have a new high, there is a high chance that price action will want to acclimatize with that level, and we could see some retracement phases. We could see some choppy situation happen around that area. So there is the possibilities of sellers coming in, which we acknowledge on the 1 hour time frame. So price could retrace back into the $2,000 level in anticipation of a trend continuation to the upside, and we could also have a trend continuation pattern around that $2,025 level, which we already identified. We already had a channel on the 1 hour time frame where the breakout of the structure will be welcoming a trend continuation to the upside. So when we scale down to the 4 hours time frame, which I told us earlier that I want to show you the pennant structure we identified at the beginning of the week. So this is what we have here. So this is the 4 hours time frame. So we identified this pennant structure. So let me extend this out a little bit, and the support line here a little bit to the upside. So we have the situation. So when we have a pennant, what we wanted to see is either a breakdown of the support line of the pennant or a breakout of the resistance line of the pennant. Though we had a false breakdown at the beginning of the week, which was our signal, but we didn't get the confirmation to join that bearish move, and instead we saw the breakout retest of this resistance line, which triggered this buy position. So at this point, will this turn out to be a flag pattern for us? So we have a situation here where the possibility of a trend consolidation is possible, and the potential of a reversal pattern too is possible at this point. So I've already shared with you how we want to position ourselves on the 1 hour time frame. So let's be on standby to catch any of these opportunities. So that is that on the XAUUSD for today. So our center of focus for XAUUSD during the New York session evolves right between the $2,025 level and the $2,015 area, whereby position above the 2025 is what we are looking for, and selling position is what we are looking for when a breakdown of the trend line happen, coupled with selling pressure below that structure, where a further breakdown of the $2,015 level will welcome more opportunities to add to our existing trade. So that is that on the XAUUSD. Very simple setup we have there. Now moving on, we are going to be talking about the GBPJPY, which happens to be an instrument introduced to us by Ajawi77. I didn't see Jawi yesterday. I hope he's around with us here. If you are around, let me know in the comment section. So on the GBPJPY yesterday, what was our expectation on this pair? So prior to our live session yesterday, we were running in profit of about how many pips in profit here? We're running with a profit of about 120 pips prior to our live session yesterday. And I told us all yesterday that following the test of the 166.400 level here, that price action appears to be caught within a consolidation phase between the 166.40 level and the 166.00 area, which happens to be a strong psychological level. And to further understand what was going on around that area, we scaled down to a much more lower time frame here on the 15 minutes time frame, and this is what we saw on the 15 minutes time frame. So we identified a simple channel here, and I told us all yesterday that whenever we cite this kind of structure, we all know what to do to take advantage of a trading opportunity. Is either price breaks out of the resistance line at the 166.40 level to buy, or a breakdown of the 166.00 level to sell. And look at what we have here. Just a couple of hours into the New York session yesterday, we saw the breakdown retest of the 166.00 level, which triggered the sell position to the downside. And in fact, it was quite a profitable move here as price action moved. Let's see how many pips was that moved right there. If I bring out my pips calculator, we bring it out here and run it through. So price action has moved a whopping over 200 pips in our direction since yesterday. And for those who took advantage of this opportunity, well done, and kudos to you for being on standby to have caught this move. And right now, if you still have the position running right now on the GBPJPY, it is very, very important that we move our stop loss to secure this current position. And if we look at the current market structure here, where do you think is most appropriate for us to secure the current position? Well, what we are going to be looking at is the previous high here, so that we can give room for price action to breed. And if we look at this, you can see that the previous high falls somewhere around the 164.700 level, and I'm of the opinion that we want to give some room for price action to breed. Hence, we should be looking at somewhere around the 164.800, somewhere around or above that level, to secure the current sell position in this market. So with a position secured at this point, how do we intend to join or add more position to our existing trade? Are we going to continue selling the GBPJPY, or are we going to be anticipating a reversal pattern at this juncture? So what we are going to be doing first of all, before we go into the details, is to scale up into a much more higher time frame so that we can have an holistic perspective into what is really going on in this market. Now, when we scale up into the daily time frame, we can see what we initially identified at the beginning of the week, and we already have price action breakout of that trend line and the neckline area at the 164.00 level. And right now, price is back at the 164.00 area, which happened to be the neckline of this reversal pattern we identified at the beginning of the week. So what's the question we should be asking right now is that, will the buy pressure above the 164.00 level continue in such a way that it would incite another wave of bullish momentum, or are we going to be seeing a breakdown retest of the 164.00 level to incite a bearish move to the downside? And if we look at the candle that closed yesterday, we will see how the candle here appeared to have closed in the form of a shooting star candle, which is a sign from a technical standpoint explaining the presence of sellers in this market. And if we are going to be taking that into consideration, obviously we want to be looking out for selling opportunities in this market. And one thing about this current structure here, if we zoom out and look at the bearish trend line that we identified since the beginning of this year, is it this year? Okay, since last year November, you will see that we saw the breakout of that structure. And from a technical standpoint, whenever we have a breakout of a significant structure like this, we expect that one point in time price is likely going to come back, do a retest of that structure in anticipation of another wave of bullish momentum. So if that is going to be the case, and coupled with the shooting star candle we saw here yesterday, we might be seeing a bearish move into the structure that was broken during the end of the month of March. That was last month, before another move to the upside happened. So our center of focus for today is going to be around the 164.00 level, which happens to be the neckline of that reversal pattern. So whatever happens around here today will determine how we want to be taking advantage of any trading opportunity. So let's scale back down into the 1 hour time frame, and we shall be focusing on the 164.00 level. So what I will be doing here, so this is the 164.00 level here. It has been a strong buying niche here in the last 36 hours now. I think it's over 36, about 50 hours now. We saw buy pressure here. We saw buy pressure during the early hours of today, and in the last 3 hours also we saw buy pressure resuming around the 164.00 level. So what I will do right now is to delete all this one so that we can have a clean chart. So there are couple of things we want to be looking forward to around this area. So we have a buy pressure around the 164.00 level now. What I will be doing here is, if we take into consideration that shooting star candle we saw on the daily time frame, which is a sign that sellers are still present in this market, then what I want to be seeing here is price action closing below the 164.00 level, and then you scale down to your lower time frame. Look out for retest of structure where buyers find it difficult to climb above the 164.00 level. Then we can be selling the GBPJPY at this point. Then a further breakdown of the 163.450 level. Remember, this is our support line for the week, and if price action does a further breakdown of the 163.450, then we shall be looking out for more opportunity to add more position to our existing trade. So let me label this a breakdown retest of structure. So we are selling the breakdown retest of the structure. So this is what we shall be looking at to sell the GBPJPY for today. So anywhere below the 64.00 level, 164.00 level, which happens to be the neckline we identified on the daily time frame, we shall be selling the GBPJPY for today. However, if the buy pressure we have been observing above the 164.00 level continue to gain momentum here, then a breakout of the 164.00 level, which happens to be the initial resistance line for the week, will be an opportunity to buy. And if we look at the structure closely, you will see how the 164.400 level also shares a beautiful confluence with that bearish trend line, which we identified after connecting the series of lower highs in this market. So if a breakout of both the trend line and the 164.00 level happens, then we might be in for a bullish momentum in this market. So let me put this right here so that when you screenshot my screen, you can use it as a reference point when you're about to make your individual decisions. So we have the buy retest of structure. So a breakout, we want to see a breakout, then price action retest structure. When we scale down to our lower time frame, buy pressure resumes here, then we want to be joining that trend continuation to the upside. Then a further breakout of the 165.200 level will be welcoming additional position in this market. So you can see here that the current structure we have on the GBPJPY has a tendency of giving us multiple entries in this market. So I advise that we be on standby to catch any of these opportunities when they finally happen during the New York session today. So on this note, we shall be calling it a day here. Before I draw the curtain, let's do a quick review of what we talked about today, so that for those who missed out from the beginning of the live session today should also be able to have a better perspective into what we talked about today. So on the USOil today, we saw how price continued to struggle between the $80.50 level and the $81.25 area. So we have a beautiful flat channel here where we have been witnessing a consolidation phase happen, and coupled with the flat channel, we have also this triangular formation where we said either breakout or breakdown of the structure will be welcoming a trading opportunity in this market. So let's be on standby to catch this move. So our center of focus is just right around this area. Breakdown retest will welcome selling opportunity, and a breakout retest will welcome buying opportunity. Then we went on to talk about the US tech for today, where we saw a structure that looks like a reversal pattern, though it's not a reversal pattern per se, but it's closer to a reversal pattern and is looking more like a head and shoulder pattern at this point. And when we zoom out to look at the structure, we saw something like this. We saw the head, we saw the right shoulder, where the $13,070 level is serving as the neckline of that reversal pattern, where I said a breakdown of the $13,070 level here will be giving us a sell position. So let's be on standby to catch that move. Then in as much as we're looking out for selling opportunities here, I told us all that we should also keep our options open for a potential bullish momentum too, as well as if price action breaks out of the trend line and we start seeing buy pressure resume above the structure, then above we could look out for buying opportunity, where the breakout of the 13,150 will welcome more buy position to our existing trade. Then we went on to talk about the XAUUSD for today, where after taking some profit off the impulsive move that we saw here yesterday, we saw price has been caught within a channel here just between the $2,025 level and the $2,015 area, where we have a flat channel. And you all know what we look out for whenever we have this kind of setup. We want to see a breakout retest of the resistance line at a 2025 for buy opportunity, or the breakdown of the 2015 for selling opportunities here. Now, to make things a little bit easy for us so that we can be part of any trading opportunity and at the same time feel comfortable in that position, I was able to connect a series of higher lows here. As you can see, price action had consistently found higher lows just right within that channel to emphasize that buyers are trying to gain some momentum to break out of that $2,025 level. And I also mentioned the psychological aspect of this current structure, where I said whenever price action finds a new high, it actually takes time for price action to gain significant momentum to break out of that structure. And this kind of area is always characterized with consolidation retracement phases, which results into a choppy situation before we finally see price move in whatever direction it wants to go. And it appears we're beginning to see traces of that situation happen here, as since yesterday we have been witnessing a consolidation phase around this area. Now, to make things a little bit clearer and easy for us to be able to cite and identify a trading opportunity, we have the bullish trend line, which I told you that if price action breaks down the bullish trend line, which appears to be happening right now, we are not going to be getting too excited, as we need some further confirmation here that will support that sellers are very present at this junction. And what I said we want to be seeing is a retest of either the trend line or it could go as far as the $2,025 level. And I said the most important thing we want to be seeing here is a reversal pattern where sellers continue to dictate the pace, buyers finding it difficult to break above the 2025, then we could sell the XAUUSD, and a further breakdown of the 2015 retest of structure will welcome more sell position in this market. So this is what we said we are going to be looking forward to sell the XAUUSD. But buying the XAUUSD at this point is only going to be happening above the 2025 level, where price will have taken out all the sell pressure here, with some buy momentum coming in around that area, which will be reflected on the chart in the form of a retest of structure, sharing a confluence with a bullish trend line for us to be part of that move to the upside. So let's keep in mind these two options so that we can be part of the move when the market finally moves. Now we close the day with the GBPJPY, where we've also identified a simple setup here, and we have used the 164.00 level as our key level for trading opportunity. So a breakdown retest of this level is our sell position, and then a further breakdown of the 163.450 will welcome additional position on this pair. However, if price action continues to the upside instead and it breaks out of the 164.400 level, I also told us all how that level shares an important confluence with the bearish trend line that has been supporting this bearish momentum since last week Friday. Then that will give us a confirmation that a bullish momentum is coming. But I told us all that we are not jumping in right away, as we need to wait for a confirmation to happen on our lower time frame, where price action will retest structure, then give us some buy pressure above the 164.400 level, after which we want to be joining that bullish momentum to the upside, and a further breakout of the 165.200 level will be welcoming additional position to our existing trade. So that is that on the GBPUSD, and it's on this note I want to be calling it a day here on the Extreme Speed Live. I hope we all had a wonderful moment here, and for those who are joining us for the first time, I hope you are able to catch one or two things that you can use to as at your advantage to guide your trading activities for today. It has been a wonderful moment, everyone. I wish you best of luck during the New York session today, and I hope to see you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well this pairs that we have been monitoring has been doing so far, as we get prepared for tomorrow's New York session. So on this note, I wish you a wonderful day. 8603, good morning to you. I see your comment. Joek91, Susie MB424, Shukib Dry. All right, I hope I pronounced that correctly. You guys are just wonderful. So I wish you the best of luck today, and hoping to see you same time tomorrow. And on this note, I wish you a wonderful and beautiful evening. Bye bye.